Hey traders, so an interesting day out there. S&P 500 bulls keeping their full control and we are closing strong, but there is technically still what I would still consider a triple top. So the bulls have full control. I would not be surprised to see this level break with follow through, but at the moment it's a triple top. And we had a scenario where I was looking at this and saying, okay, if we see an hourly lower high and then lower low confirming an hourly downtrend, then that triple top will be a lot more notable. But that didn't happen. The bears did not follow through to a new low of the day, and that's keeping the bulls strong, heading into that resistance. So what we are seeing right now happen in the markets is a big shakeup. We're seeing a lot of rotation going on. We're seeing a lot of money leave tech starting Monday, and we're seeing that money now flow into our laggard sectors. And we've seen this before on this COVID bounce. We have tech sector over here, and over here we've got financial sector, IWM, airliners, cruise liners, hotels, gaming, marijuana sector, all in one big grouping that we call the laggards. And we are seeing them explode again, and they did previously as well. So we'll look at those a bit, and bottom line is, the past couple days, the 3 days of this week, because all of this shifting is going on, there's a swirling, and again, I imagine water, and I imagine just mixing currents, just all swirling around. It's a lot harder to trade SPY right now when that is going on, because you got QQQ going up and XLF going down, and then back and forth, and that's making SPY choppy to me in terms of my clarity. QQQ is more clear to me, XLF is more clear to me, but if you're taking those two differing sectors doing their own things, it is leading to a less clear, a more cloudy SPY picture. So my suggestion is, in this environment, focus on tech or focus on the laggards, and I am paying less attention to SPY the last 3 days than I have in a very, very long time. So I'm focused on these two individuals. I'm viewing them individually as in terms of what they're doing, always watching to do what they're doing in relation to each other, but it's a bit harder to trade SPY in this environment, in my opinion. So let's just look at some of our laggard sectors and what I'm talking about. Because XLF, and you've been watching these videos over the past couple weeks, we were watching for this. Is money going to leave tech and go into our laggard sectors like it did to start June? So at the start of June, this move in the financial sector led to a huge bull move in all of those sectors that I just mentioned. And here we are setting a weekly higher low. And the bull reaction to the earnings so far has helped. And we're now looking at 2683 as a key resistance level on the weekly. The big question is going to be, do we set a weekly lower high and a tightening weekly range? But just look at this chart. Weekly, higher low formed and now trying to bounce. Let's look at the airliners. Same chart. Let's look at some cruise liners. Let's go RCL. Same chart. Let's go to hotels, H. Same chart. Let's go to MGM for casino. Same chart. Let's go to MJ, CGC. Bulls had a bit of a head start, and they had a head start by a couple days because Biden released his plan for, if he is elected, this is what I'm going to do with marijuana and medical marijuana. But it's still in the same pattern, and it's still doing the same thing. All of these sectors are significantly correlated to each other, and they're significantly correlated to the financial sector. So the question now is, how significant of a bull move are we about to see? We ended extremely strong. I mean, look at these days on these names. RCL, huge green day, strong close, up after hours. I would not be surprised to see a gap up open tomorrow. We've got Jets, same thing, big green day. Key resistance 1735. MGM, big green day. You get the idea. I traded Cron today in the MJ sector, big green day. My exposure to the laggard sectors has been through the MJ space because I've been trading it for years. I'm very comfortable with these names. I traded CGC bullish Monday. I traded Cron bullish today. That's how I'm getting laggard sector exposure. Other people are more comfortable with cruises, and that's fine as well. I used to be trading the cruise lines a lot more actively, but I've shifted. It's pretty much Tesla and MJ this week, and it's been going very well. So laggard sectors are on watch. The question is, the financial sector going to set a weekly lower high compared to 2683, or do the bulls have enough strength to break 2683 and head to the high of the COVID bounce? I would expect a lower high. That's 10% plus away still. So I would expect a lower high, and that's the case for all of these laggard names. I'm expecting lower highs across the board. Maybe MJ can break its lower highs because it had that little extra boost thanks to Biden. But aside from MJ, again, you look at Jets, what do we need? We need 20+%. So we're looking for weekly lower highs, but it's some nice short-term bullish action. So IWM was a laggard sector, and it was in our 2-day tightening range, and it finally broke bullish. And now we're looking back to the COVID bounce high, 153.39. Tons of profit taking Monday from the tech sector, and those funds are being dispersed into these laggard sectors. And just one more note on all those sectors that we just looked at. I'm not going to go through every chart again, but you can go back and look at June, early June, when the financial sector broke out. Everybody did the same thing. I love correlations. I love them. QQQ. So we're looking for a lower high. Again, all I care about, as far as I'm concerned, in the history of QQQ, the only thing that matters to me is the last 3 trading days. That is all I care about right now. Tunnel vision. What are we doing compared to the last 3 trading days? Because as I said in the video yesterday, I expect a lower high compared to the high of Monday, and I expect to trade within the range of the high of Monday and the low of Tuesday for at least a few more days, if not into next week. And how that breaks is going to be very telling, because if it's a bear break, we will confirm a daily downtrend in QQQ for the first time in a long time. Last time we confirmed a little lower high and lower low on QQQ, I don't think it's happened since the low. So that will be notable if that happens. But if that happens and XLF and our laggards are breaking out, we know the S&P 500 isn't going to be too significantly diminished by the tech sector weakness. And it's pretty much going to be the tech sector earnings, it looks like, which is going to determine how we break this range. Netflix earnings are tomorrow after hours. We will see the tech sector react to Netflix earnings. Depends on how significant Netflix reacts as to how significant the sector is going to react. But then next week, we're going to see a lot more reactions to their own individual earnings. So if we go bullish tech tomorrow, I'm looking bearish against the high of Friday and looking to stay in this tightening range for at least a bit longer. Healthcare is also helping the S&P 500 bulls hold up well. The spotlight is off of tech for now, short term, and it's on financials and healthcare. And healthcare is breaking out, and we broke 104.22, and the all-time high of 105.08 is the only resistance level from here. We are less than 1% from an all-time high in the healthcare sector, which is the second largest holding in the S&P 500, and certainly important. Cyclicals are now tied pretty much for the financial sector with the financial sector as far as the weight. And you can see it's pretty similar to the tech sector as far as the first 3 trading days this week, except a little bit stronger. Financial sector, as we know, solid move, little quick higher low on the daily, higher high, weekly bounces underway. And the question is, how long can the bulls keep this momentum? Are we going to set a weekly lower high? I would expect more likely than not, yes. But until we lose the daily higher low pattern, we can't have confidence that that weekly lower high has been set yet. Biotech bulls all time, nope, not yet. 118.36, we got real close. Again, it's similar to the tech sector with its big upper wick, its big lower wick, and here we are testing resistance. It's more bullish than the tech sector, but it's very similar as far as the last 3 trading days. And you're going to find other names that are not in the tech sector that are doing this as well. And I do the live stream every day, and we have members requesting tickers. I saw pharmaceutical companies with the same 3-day pattern, NVDA, Roku. There are these names that aren't really directly in the tech sector that are seeing this same 3-day setup that we're watching on QQQ right now. And we can say, okay, QQQ is our baseline, and I can look at XBI compared to QQQ and say, okay, that's a very similar 2-day pattern Monday and Tuesday, but XBI bulls are favored because we're much closer to resistance than QQQ bulls currently are. SMH, same thing. And SMH is more in line with QQQ. So again, watching for a lower high compared to the high of Monday, and all I care about is which are we going to break, the high of Monday or the low of Tuesday. And obviously it's very different scenarios depending on which happens. The VIX pulling back on the daily, we've got 26.10 as our last little higher low, which the bulls would like to maintain, and then 24.90. And again, what is standing out to us is we're not seeing all of our sectors weak. And we're going to work on creating some kind of alert or indicator that is letting us know when all of our sectors are doing similar things at the same period in time. Is everybody hitting the high of the day at the same time? Is everybody hitting the low of the day at the same time? That's very useful and important information because on our highest conviction days, that happens every time. You're not going to have an S&P 500 high conviction, significant day in one direction or the other if we don't have all of those sectors doing the same thing at the same time. So that's a very important clue. But we can say that the S&P 500 bulls will likely keep their grasp of control as long as at least some of our sectors are going up while the other ones are going down. Gold, daily higher low set. It is a double top at 18.18 and 18.15, but the bulls are still just fine. It would only be a red flag if we were to lose 17.90 support from here. If 17.90 holds, the bulls keep complete control. Silver is stronger, keeping its higher low everyday pattern the last few days. Closing strong. We did get a bull break by a few pennies. Silver bulls keeping their complete control and even stronger than gold. Miners with a bit of bounce followed through. We rejected from the high of yesterday first thing, pulled back and set an hourly higher low, and then broke to a higher high. So there was a nice top fish first thing, but it didn't last very long. Daily higher low is set at 36.87, and we're now looking back to the high of the bull move, 39.44 as key resistance from here. Oil is on the verge of a key bull break. We broke 41.08 double top, and now it's just 41.63. Everybody's on the verge of a key bull break. Gold's on the verge, oil's on the verge, S&P 500's on the verge. Natural gas daily higher low set with the 4-hour trend change. Little higher low and higher high. So the daily higher low is 1654, and the most important resistance is 1837, watching for the potential of a lower high compared to that level. If we were going to see daily uptrend continuation and just head straight to a higher high, we would have to see some increasing bull volume for that to happen, in my opinion. So that's where we stand overall. Very fascinating action in the market. And a couple things I want to note. Number one, go over a quick trade review. Tesla had a really nice bottom fishing play first thing this morning. And it was easy. When you are confident and experienced, and you've seen this time and time again. To newer traders, no, it's not easy. Trading is never easy. But to someone that is doing this for a long, long time, this was an easy trade. And the trade was, okay, what are our hourly supports? Yesterday, we had a half-hour equilibrium. We bounced off 1482, and we bounced off 1485. That's our hourly support, very clearly. This morning, we started with weakness. My ideal bottom fishing plays are in 5-minute oversold conditions. Ideally, as many time frames oversold as possible. But look at that bounce. We bounced right from that support level in 5-minute oversold conditions. So I'm sitting there on the morning during the live stream saying, all right, I'm waiting for this potential play off of this support. I want to see the price get to at least 1490 if I'm going to make an entry, and then put my stop loss under 1480, giving some wiggle room, because $2 of wiggle room is nothing in terms of percentage on Tesla. So entered at 1490, exited half in the upper 1490s, and exited the second half in the upper 15 teens. So in the end, it was about a 0.9% trade. And again, it goes back to base hits. I have to always harp on base hits because I had a handful of trades today, and not one of them was a day maker for me. That was maybe a 0.9% of a day maker, just under a day maker, but a bunch of trades, not one of them a day maker, and I ended up with a 3-day maker. So those base hits add up. If you can stack away a 0.5% here, a 0.5% there, 1% over here, the next thing you know, you have a very solid day. So yes, it's nice to make a lot of money quickly, but again, what is your goal? Is your goal to play this game for a decade plus? And if the answer is yes, then base hits is the way to go. And home runs will be mixed in there, and we have to limit big losses as much as possible. But as far as on a day-to-day basis, it's base hits, and the home run comes along every once in a while, and it's great. That's all I got. I think I had one more thing. Nope, that's it. All right, have a good day. We'll see you tomorrow.